This is the second video in the short series I'm doing on inheritance tax, and in this one I'm going to cover the gifts and exemptions that apply. So firstly, where there's a married couple or people in a civil partnership, they can transfer assets between themselves in life or on death, and it will be completely free of inheritance tax. And the second point is what's called potentially exempt transfers, or what a lot of people know as the 7-year clock rule. Now, if you make a gift of assets to any potential beneficiary, if you survive 7 years, that gift is outside of your estate from inheritance tax purposes. But any person who dies within the 7 years, the value of the gifts are added together and added to the total estate, and they are potentially taxed to inheritance tax, depending on the level of gifts and the size of the estate relative to the nil rate band. Now, there is something called taper relief, which means that if someone dies within the 7 years, depending how long within that 7 years they die, there will be a reduced rate of inheritance tax. If they die within the first 3 years, the full 40% of an inheritance tax will apply. From year 4 through to year 7, it is a tapered amount, down from 40% to 0% after 7 years. Anyone can make a £3,000 gift a year for it to be exempt and outside of an inheritance tax. Now that is £3,000 per donor, not per recipient. And if you haven't made a gift in 1 year, it can carry over. So the first year, for example, you could make a £6,000 gift, and therefore a husband and wife could give a total of £12,000 in the first year and use up their total exemptions, and then make £6,000 in total in future years. It's also possible to make small donations up to £250 a year, and for them not to be included in the inheritance tax calculations. So that's typically birthdays and Christmases, where parents or grandparents, for example, might want to make gifts to children and grandchildren. There's also a rule around regular gifts from income. So if you make gifts to someone, a child or a grandchild, on a regular basis, it's from income, and importantly, it doesn't reduce your standard of living, then they are deemed to be outside of the inheritance tax calculation as well. And also for weddings, it's possible to make a financial gift for a wedding and then to be exempt. So if it's to a child, you can make £5,000 gift per person, to a grandchild £2,500 per person, and to anyone else £1,000. So for example, a set of grandparents could make a £5,000 gift to on a wedding, or a husband and wife to their children or child a £10,000 gift. And finally, it's also possible to make any charitable donations or donations to a political party, and they will be completely excluded from the IHT calculation. So a good way of reducing the estate is by making large donations to charity or political organisations, if that is your wish. So that is a quick video on the main gifts and exemptions. I hope you find it useful. Look out for the future videos I'm doing on the use of the residence nil rate band and use of trusts to help manage your estate from an inheritance tax point of view. Thank you.